Imagine, dear listener, that the mighty S&P 500, heartbeat of American capitalism, could be alchemized into a monthly income geyser exceeding 11%, yet still preserve its growth-bound soul. Tonight, we unmask the contraption that attempts precisely that: ISPY ProShares S&P 500 High Income ETF. ISPY launched on 18 December 2023 amid a renaissance of yield-hungry investors. As of April 2025, its coffers command roughly $722 million in assets. For perspective, that's a 700-fold leap from zero in barely 16 months. Its stated quest? Track the S&P 500 Daily Covered Call Index before fees and expenses. Fee, singular yet weighty, 0.55%. Over 4 times the Spartan SPY, but typical for engineered income funds. Conventional covered call ETFs vend 30-day options, capping upside for an entire lunar cycle. ISPY is far wilier. Every single morning it sells fresh one-day, slightly out-of-the-money calls on the broad S&P 500. At the closing bell, the option vanishes, either worthless, premium kept, or assigned index upside clipped for that day alone. The slate is wiped clean at sunrise, permitting reparticipation in tomorrow's rally. Technically, ISPY executes this trompe-l'oeil not by juggling 503 stocks, but via total return swaps that synthetically mirror the index while its option overlay hums above. Now, to the glittering bait 12-month distribution rate, 11.05% as at 31st March 2025, paid with clockwork regularity each month. Latest check, 7th April 2025, $0.9078 per share, of which a spellbinding 96% is return of capital. An accountant's sleight that defers tax, yet quietly lowers your cost basis. Mind the warning, return of capital is neither sorcery nor free manna. It merely postpones the taxman's knock until the day you sell. From birth through 31 December 2024, ISPY clocked a 22.5% total return, eclipsing the 16.8% average of its monthly option rivals. Year-to-date 2025, despite April's wobble, the fund still rides around 8 to 12%, depending on entry point, thanks to its daily premium cushion. Under the bonnet, you still own all 503 S&P members, weighted as usual: tech 29.6%, financials 14.7%, healthcare 11.2%, and so forth. Apple, Microsoft, and Nvidia alone form 1/5 of the carriage. But every enchanted artifact bears a curse 0.55% fee drag, palatable only if the premium well stays brimming. Upside shave, a ferocious single-day melt-up can still leave you trailing SPY. Swap counterparty risk. Although collateralized daily, you rely on the solvency of large banks. ROCE complexity. Your 1099 diva may read like hieroglyphs. Consult a tax sage. Who might treasure such a relic? Retirees craving a reliable stipend without abandoning equities. Barbell strategists park 30% in ISPY for cash flow, 70% in growth ETFs for thrust. Volatility tacticians betting the index will meander, letting theta pay the rent. I shall now deploy real sovereigns, $50,000, into ISPY. And each lunar turn we shall tally its tribute together. Subscribe, dear Voyager, so you witness whether this high-income chimera thrives or withers under its own enchantment.